Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top on Friday, as the recent rise in the euro has seen the market get caught between the declining middle time, currently 106.90, of the well-highlighted January to May 2021 bearish Andrews pitchfork, and the overhead next piece of resistance, the combination of the May 2020 low at 107.66 and the declining short medium moving average, currently at 107.64. Now this moving average is important, as I would only ask you to look upwards on the daily chart at the last time the market approached the short medium moving average back at the end of March, and the resultant move lower. In between these two, we have the April 2020 low at 107.25, which is where we finished on Friday. Thus, all this makes for an interesting market over the next few days, though looking further below, the next support is the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower thereafter. Meanwhile, further above, we have the mid-February downtrend, currently 108.10, though this is still only a two-pointer. Now, so far today, a higher opening, an attack at the combination of the May 2020 low and short medium moving average, piercing both, but then pulling back below both as well. Cable, aka sterling against the US dollar. A third bullish white soldier on Friday, and bordering on looking like an indecisive spinning top territory as well. This was a continued follow-on higher to the recent immediate countering bullish harami. The market is still within the free area between the congestion zone below, which is 124.78 to 125.09, within which is contained the 38.2% Fibonacci line of the March 2020 to June 21 move at 124.89. Meanwhile, above, and not that far away, are the resistances at 126.72 and 126.86. For reference, the 126.72 is a September 2020 low. We do have the high from 3 weeks ago in the 126.35 area in between, but I'm minded not to reference that too much right now. So far today, well, an attempt higher towards the resistance at 126.72 and 126.86, but pulling back from properly testing it. Euro sterling. Further intraday indecision here, with a counter to the counter bearish harami on Friday after the previous session's immediate countering bullish harami, if only just. Still seems the market is not done with the pipe top stroke possible double top formed earlier last week. Just below current levels, we have support from the following: the April 2021 low at 84.70, the broken September 21 to date downtrend currently at 84.67. That makes up the upper trend line of the extended diamond pattern. Then there's the flatlining long moving average, currently 84.42, the upper trend line currently 84.12 of the smaller, more robust lopsided diamond pattern. Finally moving up and into the frame, short medium moving average, currently 84.15. For the moment, we still have on the upside for the smaller lopsided diamond pattern, primary target X in the 86.80 area, and a harder secondary target X1 in the 87.65 area. And for the extended diamond pattern, we have a primary target X2 in the 87.15 area, and a harder to get secondary target X3 in the 88 even area. Additionally, there's also one final pattern, and it is a big one, which this market has previously triggered but then sent mixed messages on. Now, I've spoken for weeks, months even, of the large falling wedge pattern, currently 84.67 to 81.58. This pattern is still in operation, but it has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, this pattern still leaves us with some questions. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area. And that is a really big ask at the moment. So far today, well, a slightly higher open and a small move up, countering now it seems with a yet more intraday indecision to the third degree. It's actually looking a little bit more like a bullish double at the moment than anything else. US dollar against the Indian rupee. An indecisive spinning top on Friday. Now, I hate repeating this, but it was once again well within the new congestion zone between 77.40 and 77.80. However, there seems to be a possible new element in the mix. You see, whilst the market is overall still in between the lower time below, currently 77.16, and the middle time above, currently 78.62, of the mid-January to early April bullish Andrews pitchfork, and we still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action being a possible bullish halfway hesitation. See, with all these big picture patterns, we should not overlook something growing at our feet. And by that I mean that the last 3 weeks action does have elements of a horn top, as well as elements of a possible ascending triangle pattern. These are not fully developed patterns, just actions that have elements of these patterns. Hence, I'll ponder on this, or these, a little more as the market continues to seemingly still be trying to make up its mind about what's next. So far today, a slightly lower open and an interesting piercing of the very recent uptrend, currently at 77.52, which is also an element of a possible very recent ascending triangle pattern. More on this should it develop. US dollar against the Brazilian real. A second bearish black crow on Friday, and the apparent restarting of the recent move lower of 2 and a bit weeks duration. The market pierced both the significant congestions at 472.90 and 471.42, but pulling up to close on the former. As I've recently reported, I suspect the continual decline of the short medium moving average, currently 486.43, may have prompted this move lower. Overhead, we still have the June 2020 low at 481.62, as well as, and perhaps more importantly, the 50% Fibonacci line, the October 2018 to May 2020 move at 477.54. In the bigger picture, we're still in between the upper time, currently at 507.75, and the middle time, currently at 461.66 of the start of 2022 to date, bearish Andrews pitchfork. This is still an early development bearish pitchfork, but it may have some merit in forming and hence showing the recent bearish angle of attack. And it'll be interesting to see what happens when the market approaches the middle time below, should it do so. US dollar against the Mexican peso. A very significant bearish black crow on Friday, the fourth in a row. Its significance was due to the piercing and closing below the recent support at 1971.68. This was also the base of support 3 times during April. This is a significant move lower, as in addition to seemingly breaking the support, prices have also dropped down to the cat's ears pattern target area in the 1954 even area. I previously said on this target this was the minimum size move for this pattern, and that it may probably extend even further down, as it is a bit of a lopsided pattern. This also means that the middle time, currently at 1953.95 of the November 21 to March 22 bearish Andrews pitchfork, is now under threat, as well as the 2021 low and at 1953.63. So far today, a slightly higher open, and then a test lower, though both the 2021 low and the middle time through both of those, but here's a small effort that so far has only pierced both supports rather than actually broken them. We're now on the edge of a fairly free area below, all the way down to some dubious congestion support at 1915. It will be interesting to see if the market goes for it during the course of this week. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investors International Limited. And here comes the final bit.